Morris, it is great to have you back.
Thank you,
a lot of
Carl.
discussion today about how much larger, how much more engaged Netflix's audience is than it was before COVID began. Does it deserve the same share price?
Well, I'm going to put it this way. Netflix is not the first thing on my mind right now. We had a medium-sized position. We now have a token position. Maybe I didn't answer some of your question. I think it's a really good company run by really smart people. When they reported the quarter, they sent a message, and the message was, hey, we're going to have to spend more money, and we're going to have to defer the timing of the improvement of profit margins. So I think right now my concern is obviously much broader. We've cut exposure dramatically in my hedge fund so that our net investment position is modest, though we can be very flexible on that. And there's a message there. And we built a lot of cash in my equity fund. We're keeping the quality. We think the quality will perform well. I think the parallel might be 2008. 2008, they cut everything apart. 2009, anything that was really good came back better. I'm not saying that's what this year is going to be like, but what I am saying is that tactically, I think that's the way you have to approach things.
Morris, how are you defining quality in this market? How are you valuing companies? I mean, there's talk about fundamentals returning. What are the important fundamentals? Can you not invest in any company that's not profitable right now, even if its top line growth is exceptional?
Yes, you don't. You just don't. I think there are a couple of lessons here. Number one, you want financial staying power, okay? And I think that the first thing that happened, and this started in the fourth quarter, is that the market started to suffer indigestion. I think Jim Cramer put it very well this morning. It had 600 names. 600 names were issued in the last 12 months. A lot of them is SPACs, which is even worse, but a lot of names, a lot of paper came out. Now, in that paper, there's some really good businesses. But my criterion is really simple. If it ain't making money, if it ain't generating free cash flow, we'll pass. We'll watch it. We'll follow it. We'll see what happens.
Morris, okay, am I hearing you right? So nothing that isn't making a profit. How do you make outsized gains then? You would have missed out on an Amazon, Tesla, countless others. You're looking for quality, but you could sacrifice some of those bigger gains that we've seen from remarkable companies over the last decades.
I think it involves hard work and research. We started buying Apple in 2006 and again in 2008, and we still own it. We have some Alphabet that goes back to the original IPO that we really came back into it in 2010 and 2011. So I think the criteria is a lot of this is in your gut too. You sort of know when you see something really special about a business. Right now, what's really special is companies that are generating tons of free cash flow, that have powerful franchises, and that are still growing very rapidly. Alphabet is still growing very rapidly. And remember, it operates throughout the world, except for China, okay? I can keep saying that about a lot of names. So that its opportunity is still open-ended, and there's a secular trend benefiting it. Because we're in an omni-channel world, which means people buy both online and offline, a lot more marketing, a lot more selling is done online, even though you end up in the store. And we like shopping in stores. Usually now when I go in a store, I know what I want. I know the style, but I just may want to try it on, for example. So I think you can buy some terrific businesses today, and we're not yet doing much buying. We've got it down to a level where we're going to keep what we like. We're definitely invested in our equity fund because that's what it's for. We're definitely invested in our hedge fund, but we've reduced exposure dramatically. And one of the things I think you got to realize now is because we can do it, everybody can do it. And the market's going to move fast both ways. And you got to figure out when it's real, when it's really going to get better. Okay? Because everybody's using the same way of hedging. And you've got to be aware of that.
Yeah. Finally, Morris, we should point out there's a few media names doing well. Fox up on this upgrade saying that they're well positioned to benefit from sports betting. Our parent Comcast and Charter saying the view on broadband slowdowns too draconian, and they get upgraded at RBC. Are you seeing things like that in your universe?
Yeah, look, First of all, I don't disagree with anything you just said. Fox is intriguing. We're not there, but we're looking at it. But we've been buying Disney, and it's a position we've had over the last couple of days. Now, we haven't taken a major addition. We're just not doing any major additions right now. But it's our way of remembering that Disney is a very cheap stock. Cheap. It's trading well below its strategic value. That's one of my criteria now in terms of looking at something. And I think the thing you got to remember about Disney, Carl, is that they own some of the world's most valuable real estate on a scale that's unprecedented. They've got 32,000 acres of property in the middle of the second fastest growing state in the country, where they represent the fulcrum of tourist destinations. And I'm going to agree with one of your previous guests. The pent-up demand for travel is enormous. Every time we go out or we talk to a friend, all they want to do is plan a trip. And I think that includes Disney World. So when you look at Disney's numbers, I'm just amazed, frankly. Maybe I'm not amazed because Brian Roberts is a lot older than the last time he tried this. He tried to take over the company, I guess it was about 10 or 15 years ago, and almost pulled it off. I mean, if I were him now, and I'm not telling Brian what to do, he's a lot smarter than I am. I call Blackstone and finance the real estate. Disney is unbelievably valuable.
Morris, it's always good to get your view, especially on a day like this. Thanks so much. We'll talk to you soon again.
You too, Carl. Thanks.
How's that for a gutsy piece of advice? Well, also, social stocks selling off today. Snap getting a downgrade this morning. Twitter and Pinterest with price cuts as well. Our Julia Boorstin checking in on the bears. Julia?
Well, John, social media stocks are plummeting right now on some down.